So what is insurance? It's a product that helps us protect our health, our property, and businesses from loss. But insurance is actually something much bigger. It's a system that makes big financial losses more affordable by pooling the risks of many people and businesses. These risks are transferred to an insurance company in return for a payment, better known as a premium. So what kinds of insurance are there? Insurance is sold in three main categories: property casualty insurance, life insurance, and health insurance. We'll go into more detail about these categories in the next segment. We'll also talk about the skills you'll need to be a part of the industry. But let's start with the history of insurance. It certainly wasn't invented yesterday. Welcome to Paris. Well, I'm not really in Paris, and I'm certainly not in the Louvre, one of the most famous museums in the world. But this object is. It has a lot to do with insurance. This is the Code of Hammurabi, created by the king of Babylon around the 18th century BC. The king didn't have paper, so that's why it's on a rock. But the code is one of the oldest living legal documents in civilization, and it created the earliest known example of insurance. A portion of this ancient text, well, somewhere on here, provides a guarantee. It says that people who owe money wouldn't have to pay back that debt if some personal catastrophe made it impossible. So you're actually looking at the first insurance policy. A few centuries later, the insurance industry would take another big step forward. Into London. London in the year 1666 to be precise. That was the year of one of the biggest disasters in recorded history, the Great Fire of London. It started in the middle of a drought, and 3 days later, it gutted the central part of London, wiping out some 13,000 houses, 87 churches, and the city's commercial center. There was no official death count. Now think what would happen if a major fire hit the center of any major city today, and there was no insurance to cover the damages. That's what changed in 1666, and it made London one of the top insurance centers. As London rebuilt, businessmen started selling basic insurance policies funded by nervous property owners. But they really didn't have a system in place to make insurance an organized business. They didn't have experts in place to gather statistics and predict what future losses might be. Today, those experts are called actuaries. They also didn't have people in place who could gather information on potential customers and what they should pay for coverage. Those people are called underwriters. Most important, the early insurance companies didn't have a way to protect themselves if an unexpected disaster happened. That's called reinsurance. But those ideas would be invented very soon. At a London coffee house owned by a guy named Edward Lloyd. By the late 1600s, shipping on the high seas had become a global business, and English and Dutch merchants had created the shipping industry in Europe and Asia and were just beginning to explore America. But ships sank, pirates stole their cargo, massive losses of money and life were common. So, back to Ed Lloyd's coffee house. In London, word got around that it was the place to go to find out about the latest news in the shipping business. And soon, Ed realized that coffee wasn't his business, insurance was. Lloyd started advertising and gathering London's top business leaders and investors, and they built a new insurance model, where real information replaced guesses. And many more people put their resources together so nobody went bust. And thus was born Lloyd's of London. Today, it's not what we would call a conventional insurance company. It's a marketplace that gathers people together to share risk in case major loss happens. It's still there in the center of London's financial district, but clearly it's not a coffee shop. So, in the past 400 years, insurance has become a foolproof game, right? Wrong. Even though we're better than ever at predicting the weather, it can cause unexpected damage. Buildings, products, and machinery still fail. People make mistakes in their homes, in their vehicles, and on the job. Governments make mistakes too, and global conflicts still cause enormous loss of lives and property. Risk will always be there. That's why the insurance industry needs bright people who can analyze and anticipate risk. That's you. In the next segment, we're going to take a closer look at how insurance works. Let's move on to part 3.